All right, and just like that, we are back in the exact same spot we were 3 days ago after the nice little Powell pump yesterday that I personally think should be faded. We were fading it into the close, and we'll get into the exact reasons on why. But I do want to mention before we get into it, these videos, if you've noticed, have been coming out a little later than the pre-market. And I know I said I was going to try to get them out in the pre-market, but I haven't been able to because YouTube can take anywhere from 1 to 3 hours to upload a video. So I'd probably have to film them the night before if I wanted to get them out super early. So if you haven't already, subscribe and turn the notifications on so that you are alerted as soon as the video comes out. The reason I have to do it in the morning is because I want to incorporate real-time data, stuff that's coming in. So make sure to subscribe and turn the notifications on. And with that, let's get into what happened yesterday. So the market reaction, I guess it was good for a day or so, but I personally wasn't buying into it. They raised 75 basis points. This was probably the most expected rate hike that we've had out of all of them so far. And the reason that the market reacted in such a positive way, you'll notice it didn't happen as soon as the announcement came out. Everybody expected 75 basis points. That wasn't a surprise. It was mainly based on Powell's guidance, or his lack of guidance. He basically ditched it, and that's why the market read it as a pivot from the Fed, but there's still a ton of uncertainty on the table. He didn't say that he was going to be cutting rates in the future or doing less than expected. He basically just said that he's going to take what's happening in real time and he's open to adjust based on the current levels of inflation and how the market's reacting. But you also have to remember that it is Powell's job to make sure that everything seems like it's under control, so you can't necessarily just take his word for it because that only goes so far. So let's jump in and look at what happened in the market, the key signals that we were mentioning all week. It's really the most important things to watch. The dollar, that's the most tied to either a hawkish or a dovish Fed. This dollar barely moved. Yesterday it went down obviously on the news, but we're bouncing up again this morning. Have yet to break down through the low end of the volatility range, not even close to testing a trend breakdown. We also walked through the yield curve yesterday, the 210 spread, and kind of the importance behind that. So if you haven't checked that video out, I definitely recommend going back and taking a look. I walked through, what it means and kind of the implications it has on the market moving forward. So yeah, the dollar barely moved up again this morning, and that inverse correlation between the dollar and the S&P continues to strengthen. So you have that dollar up, stocks down, and vice versa dynamic going on. So if the dollar continues to stay strong in trend, that is going to affect the equity market and lead that trend lower. So let's go back and take a look. What happened under the hood if we pull up our US equity dashboard? Same story, same thing we've been saying really this whole time. Every time there is a huge bounce, yesterday's was massive. You had the NASDAQ up over 4%. So with that move, you would want to see that, or you wouldn't even want, if you're a bull, you need to see that supported by volume coming in. And if you look, obviously versus the 5-day average, on Monday, that was the lowest volume day that we've had year to date. So it's tough to compare it to the 5-day average. The 1 month and the 3 month are more important. So if you look at the 1 month average, low across the board, really had no significant volume coming in. Versus the 3 month too, you have to consider, we've been trending lower for 3 months. So you'd want to see on the biggest day that we've had, probably since like the last Fed meeting, you'd want to see that volume come back. And it just, obviously did not. You can see it here. You can see everything versus, the SPY was down 11%. If you look at semis, they were up close to 5%, but the volume was down 20%. So you're not seeing that supported by volume. Another thing I want to walk through is a good chart here from Spot Gamma. If you don't follow him on Twitter, I definitely recommend checking him out. But yes, S&P broke through that 4,000 level. We also mentioned how that was a key resistance level, or at least in the immediate term, based on positioning in the options market. So there was a large call wall at that 4,000 level. But if you open it up here, you'll see that when the S&P moved, that's the black line here, and we had that major jump as soon as Powell came out and started getting rid of his guidance. The call buying immediately stopped. So you didn't see that move supported by aggressive call buying. You did not see that move supported by volume coming into just stocks broadly. And once again, the number one mover of just the basket of stocks was the high short interest factor. That was reported from Goldman yesterday. So another day of aggressive short covering, and you're not seeing it supported by the volume in the market. You're not seeing it supported by aggressive call buying. So that's why I started to fade that into the close. So those are kind of the big macro signals that I saw. We basically went from the lower end of the range back up to the top end of the range. Nothing big. When you're trying to quantify these short-term moves, if you're kind of just looking at it in terms of ranges, like it really wasn't that big of a move. You come down, you go to the top of the range, you come back down towards the middle, and then you go right back up to the top. So we're back up to the top of the range. You did not see it supported by the volume in the market. The number one mover was that high short interest factor. So you can see that investors are clearly aggressively covering shorts. You didn't see it supported by the call buying, the dollar, the yield curve barely moved. Not a lot of market signals are confirming Powell's moves yesterday. So just keep that in mind. You can't just listen to Powell. He's never going to come out and say that everything is way worse than he expected, or he's not going going to come out and kind of guide that he's going to be raising rates aggressively for the next however many quarters. He has to make it seem like it's under control, and he knows what's happening in the market, right? He's been doing this for a while, so he is a pro when it comes to making the market seem like it's under control. So that's just what I see. If we jump into our top overbought and oversold signals, don't have any oversold bullish trend signals across the board, across all of our global macro dashboards. I think we now have close to 100 overbought signals. So yesterday you saw, or if you really just watched this unfold, 3 days ago, we had 150 overbought signals. That's when basically everything was signaling overbought under the hood, especially in these small cap and tech names. Yesterday we had 20, so obviously more of a fair fight either way, and now we're back to 100. So the market is definitely leaning overbought. If we look at, we also have, I'm not sure if I've showed this dashboard yet, but we have our style factor dashboard. So this is where you get, if you want to dig even deeper and look at how different factors are moving. So you talk about high beta, equal weight, low beta, mega cap growth, everything is now, close to everything is signaling overbought, a lot of downside in the range. And we have upcoming catalysts, right? So we have GDP, we also have Apple coming out and reporting. So there's definitely a lot on the table. The catalysts are still there. The market, in my opinion, is still in a vulnerable position. So take that how you will. That's what I'm seeing. I just wanted to keep this one quick, jump through all the signals that I'm watching on a daily basis. If you guys do want to see these updates in real time, as always, check out our premium memberships down in the description below that we have on Patreon. But yeah, I think that's really all we're going to go through today, and I'll catch you guys back here tomorrow. Peace.